I think you can all agree with me that figuring out when to enter a trade is probably one of the most important things as a trader. But in my opinion, understanding when to exit is even more important. So in today's video, we're gonna take a closer look at a trade example from the trading room, and I will show you how I use a method of observing the behavior of the trend to decide if I should exit the trade early or not. Welcome to the channel, everyone. If you are a returning subscriber, I love you. You are awesome. Hit that like button, that would be very much appreciated. Now, if you are not subscribed to the channel, hit that subscribe button and welcome to the RL Said Trading family, where we help you simplify your path to greatness. All right, let's take a look at this trade example right here. And I want you to first look at the chart here. Look at market structure. What is market structure telling you right here? Well, it should be obvious to most of you that we are looking at somewhat of a downtrend. Now, of course, it's not only one trend. You know, you remember the video that I made about price action being fractal. It's more about the overall trend, and then you're looking at smaller trends within that overall trend. So let's do some drawings here. Painting. What I would say right here, you have somewhat of a range, right? And here you have a trend, and here you have a trend. And then I would say that the overall trend here is you have this big trend as well, kind of goes like this. So I would say that the overall trend is bearish, right? So we have that confirmed. The higher time frame is bearish. And now we kind of want to look at the local trend where we are going to trade. So this is on the 4-hour time frame, and this is on Euro NCD. And I do really like this level right here. So what I'm thinking is we have some sort of horizontal level, kind of goes through this area like this. We want to short this, okay? We want to take a short on Euro CHF right here. Now, I had to be honest with you guys. The fib placement that I'm gonna put on the chart here it's not perfect, all right? It's not perfect, but that's not the main focus of this video. The focus of this video is to teach you how to look at the behavior of a trend and then knowing if you should exit the trade early or not. You know, when a trade kind of gets close to your stop loss, or it's like halfway between entry and stop loss, and you're thinking, you know, should I exit this trade? Should I take the loss, or should I wait for stop loss to get hit? What I've started doing is I've started exiting the trades earlier before that stop loss is getting hit. So some of my losers are smaller than 1R, which makes a huge difference in profitability. So let's add the fib tool right here. We go down here to the Fibonacci retracement tool. We're going to add it from this high right here to that low. And what I mean by not using the perfect highs and lows, obviously you should use this area because this is one move on the 4-hour, but I'm going to be using that one right here because that's the one I used in the setup that I posted within the RL Said trading room. So let's see what happens here. You see price is coming up into the and let's observe the trend here. Very, very important that we observe the trend. So we can add some trend lines here, maybe one that goes like this, and we have another trend line that goes like this. And you'll see that, yeah, this is the overall downtrend, and this is the trend that we're trading. We're not trading this trend or this range. We're trading this specific trend right here. So let's see if we can get some entry confirmation here. And I think that would be the confirmation that we're looking at. Yeah, we have a bearish engulfing candle after the hit of the short RL Said, the reload zone. We are getting a bearish engulfing candle that's closing below the 50% fib right there. And if you add the stochastic RSI on the 4-hour, you see that you also have the stochastic RSI giving you a bear cross at the same time as giving you a bearish engulfing candle at this level. This is where we want to enter the trade. Let's put on the short tool here. We probably enter the trade right here. We put limit orders on the 50 just to get that best possible entry right here. And we can remove this level now because, you know, we know that there's a level here. It's quite obvious. Stop loss, where are we going to put the stop loss? I think we need a very wide stop loss for this one right here. So I want to put it above the reload zone, above that trend line, and our TP is going to be down here. This is a 1.4R trade. A lot of you might be watching this and say like, that's a pretty small trade, as low R trade. But if you have a win rate that I have around 55%, you're good with taking trades that are above 1R, and especially if you're using this method of exiting early, because if you're exiting some of your losers early, that means some of your losers will be smaller, which gives more room for the winners, and it also gives you the opportunity to actually be able to take trades with lower R and still be profitable. So we now have this trade right here, and I think it looks good. The trend here is beautiful. We are taking a short within this trend right here, and I'm also gonna add the reload zone. I mean the RLZ slingshot, the indicator that I'm using to get the EMAs on and all the short signals. There's no short signals now on this one because I've disabled it, but you can see that EMA cloud here on the 4-hour aligns with the reload zone. So we now have an entry on this one. We're in the trade right here, and now I kind of start questioning this trade at this point, right? Obviously, because there's like a big bullish candle right after entering this trade, and then it goes down, and now I'm saying to myself, you know what, it kind of, it feels pretty good. It feels pretty good again, but now it's time to look at the behavior of the trend. And what I do at that point is I look at the highs and the lows, and I look at the structure of the highs and the lows, because remember, this trade is based on shorting a potential lower high in the trend. So here you have a high, a lower high, lower high, lower high, get a low, lower low, and a lower low. So let's look at the specific behavior of these highs. We can focus on the highs because that's what we're watching. I have some comments on this low as well, because this low obviously looks different than this low and this low. So on this high, you have two candles. On this high, you have two candles. And on this high, that bearish candle is just the very top of that lower high. The characteristics here is pretty clear. Is few candles creates these tops. Here, a whole different structure. Before this up move, before that up move right there, you had a pretty good structure. So let's go back again by looking at the replay function. Now, this high right here looks somewhat similar to this high and these two highs. It's just one rounded top. And what happens on the next candle, that rounded top now starts to look like a double top. And then you have that candle again. Now we have multiple candles forming this lower high that we want to short. Let's look at the next candle. Now it goes lower, and obviously at this point I'm feeling good about being in this trade, but I'm always observing the behavior of the trend, and I'm telling myself, if I stay in this trade, I'm basically staying in a trade that's based on something completely different than what I entered on, because now price action looks very, very different. Let's see what happens on the next candle. And the next candle. And now it looks way different. We could now argue that this is turning into a range. So what do you have usually at the bottom of a trend? You are starting to develop ranges. Now, most of the time, the picture perfect trend is when you have the ranges at the low of that trend. But sometimes you're going to have a shift in behavior at these lows. As you can see right here, you have a lower low. You have a low, lower low, and a lower low. And this is actually a higher low. Now, with this in combination with this possible range right here, what I did was I exit this trade right here. So let's add that one right there. And we're going to say exited here. And this trade is also a great example of why I want to move my stops to entry when price goes into profit. So imagine that this is the entry. Everything looks great. We have a new lower high in the trend. Now imagine if price moves down here. Okay, we have a low time frame support area. Actually, it's not low time frame. We have that one as well. So it's a pretty solid support area right here. Now imagine if price is trading down here. We now have price trading right on that support level. Why do I want to stop? Why do I want to move my stops to entry? Because the chances are that we're just going to get we can just get a move like this, right? And then down to profit. So why do I take that chance of moving my stops to entry? Well, it's simple. I want to minimize my losses as much as possible, because if I limit my losses a lot, that opens up the door to be able to take trades with lower R, and trades with lower R has a much higher probability of working out. So I increase my win rate, which is actually one way of becoming more profitable, right? So when price is going down here, I move my stops to entry. Why? Well, it's all because of I'm predicting what the market structure is going to look like if price goes back to entry. Because imagine if price goes back to entry, what do we have now? Well, we have something completely different. Look at this. We have a high, lower high, lower high, lower high, and then a low, low, and a lower low. Now imagine if you get a higher low, and then price starts coming up here and creating equal highs. Now this structure right here is very, very different from this. So we're trading with the idea of history repeating itself. We want this trend right here to repeat itself down here. But we're not getting that. We're getting a whole nother market structure. We're getting a range. And when price again hits that entry, I am happy to get out with a break-even trade, because now the trade that I took based on my edge, that edge is not visible in this market or this trend right now. All right, guys, that's just a quick example to highlight the importance of observing the behavior of a trend. Now, this is not easy in the beginning. What you really need to do is you need to dictate a lot of time to really observe these structures. So this is a visual skill. There aren't any specific rules when it comes to changes in behavior. It's about investing time in watching trends and drawing out that market structure. And after time, it's gonna start to feel intuitive. You will find yourself looking at a chart and thinking, you know what, I might just exit this trade, because the trade that I'm in right now is not the trade you initially entered. I hope you enjoyed watching this video as much as I did creating it. Now, if you did like this, it would mean a lot if you could hit that like button and subscribe to the channel. And if there is any other TA method you would like me to take a closer look at, or if you're interested in maybe some details of my trading system or my overall trading approach, just drop a comment below. I will be more than happy to create a video based on your comments.